Look out the window. Bitcoin at $58,000 doesn't mean the crypto ecosystem is completely dead. But let's be honest, the cold winds of a market correction are howling loud and clear. If you're an intermediate investor, seeing red portfolios day after day can trigger that deep instinctual panic to dump everything and run for warmth. But running blindly into a whiteout is exactly how portfolios freeze to absolute zero. Think of this market drop not as an apocalyptic ending, but as an intense, predictable blizzard trek that requires specialized survival gear. Meet Jordan, an investor who is currently staring into the freezing steam, feeling the icy bite of market volatility. Fortunately, Maya is here to serve as your experienced guide. Surviving this crypto winter isn't about guessing when the storm ends. It's about checking your equipment, managing your energy, and executing a rational blueprint to outlast the freeze. Let's gear up.
Before we take a single step into the deep snow, let's establish a baseline truth about your survival pack. Crypto investing is a high-altitude, treacherous peak prone to sudden avalanches. It is fundamentally different from traditional wide-market index funds. Think of those index funds as a well-paved, heavily maintained highway down in the valley. It is built for steady, long-term cruising with historical, reliable progress. But out here at 58,000 feet, you are dealing with wild, highly speculative volatility. Maya reminds Jordan that crypto should never comprise your entire financial life raft. If you over-allocated your life savings to this single digital asset, you are trekking with zero thermal gear. A rational strategy means ensuring your foundational survival needs are secured down in the valley before risking capital up on this frozen mountain.
Now that our backpack is balanced, let's talk about movement through the storm. In a true blizzard, sprinting blindly is fatal because you exhaust your energy before reaching safety. In the financial world, energy equals your remaining cash. Instead of trying to heroically predict the exact bottom of this $58,000 correction, rational survivors rely on dollar cost averaging, or DCA. Maya demonstrates this by showing Jordan how to take small, carefully timed steps forward at regular intervals. By investing fixed amounts on a strict weekly or monthly schedule, you automatically buy more asset units when prices plunge and fewer when they rise. This mechanical pacing completely deletes the emotional panic of market timing. It transforms the freezing, terrifying market volatility into a strategic ladder. You are no longer gambling on a single desperate leap. You're consistently moving through the drifts, preserving capital while steadily accumulating value. Slow and steady wins the freezing race. As the storm gets fiercer, your physical safety becomes paramount. In a real blizzard, staying exposed in the open wind will destroy you, which means you must construct a robust snow cave. In the crypto winter, leaving your digital assets sitting vulnerable on centralized exchanges is like sleeping naked on an iceberg. Exchange platforms face extreme counterparty risks, liquidity halts, and unexpected security hacks when market stress spikes. Maya hands Jordan a specialized cold storage hardware wallet, explaining that self-custody is your personal fortress against the freezing environment. By moving your private keys completely offline, you remove third-party vulnerabilities entirely. If an exchange collapses in the middle of the night, your assets remain fully protected inside your personal vault. Do not cut corners here. Taking control of your private security keys guarantees that no matter how hard the centralized winds blow, your wealth remains insulated, secure, and entirely yours. Inside the safety of our shelter, let's unroll the historical weather map. When Bitcoin sits at 58,000, it feels like the freeze will last forever. But zooming out reveals a grand macroeconomic pattern. Crypto operates in macro halving cycles that mimic seasonal changes. Maya points to the charts, proving to Jordan that every massive historical bull run was followed by a punishing, icy winter correction. However, the most vital revelation on this map is that every single winter was eventually broken by a thawing spring. The market contracts to wash out over-leveraged gamblers, leaving behind a stronger, hardened foundation. Intermediate investors do not look at today's snowdrift with despair. They analyze historical cycles to understand macro context. By recognizing that cyclical drawdowns are natural features of this specific asset landscape, you shift from a state of emotional panic to strategic anticipation. Winter is temporary. Spring always reclaims the mountain. Look ahead. The blizzard winds are starting to lose their blinding force as we arrive at the mountain summit outpost. By building a clear risk management strategy, separating speculative crypto from core index funds, maintaining a mechanical DCA schedule, and locking your wealth securely in self-custody, you didn't just survive the crypto winter, you mastered it. Jordan stands next to Maya, looking across the vast horizon with newfound clarity and absolute confidence. Volatility is no longer a monster that terrifies you. It's simply the environmental price of admission for high-upside digital assets. You are now a rational, cycle-tested investor who acts on data rather than fear. The freeze at $58,000 was never a tragedy. It was the ultimate test of your strategic discipline. Pack your gear correctly, stick strictly to your blueprint, and navigate the cold like a professional. You've got this, and the spring is closer than you think.
As always, appreciate you hanging out today. See you in the next one.